stock of the day though, stock that I pick, which is in the news today. Thought we'd take a look at Amcor. The packaging company is out this morning with its quarterly earnings report. It affirmed earnings guidance of 67 to 71 cents a share. Company's EBITDA slipped 5% to 459 million in the 3 months to September from a year ago. But Amcor said it was actively looking for acquisition. So unlike a lot of companies, has given a bit of guidance, not only from a trading point of view, but looking for acquisitions in the future. Jared, what do you think of the update today from Amcor and the stock itself?
Amcor's not really in our wheelhouse. As you know, we're growth investors, but from when I had a look today, I mean, it feels tough, doesn't it? You've got, volumes struggling basically, but they have had some mix in terms of price, ability and cost out story. It's sort of, that seems to be the silver lining for them, and their ability to rip costs out and continue to kind of innovate, I guess, in this plastics. But I think, broadly as a longer term investor, you've got to really question whether or not, it's somewhere you want to be.
Right.
Given, sustainability and all of these issues being a plastics manufacturer. So for me, that's probably one of the longer term concerns, I think, with the company. But, it met consensus numbers. The second half, management is saying that they're expecting to lap a lot of the divestitures in Russia. So, there should be a better second half result, but longer term investment, I would have to say that I'm a bit challenged on the story, and it's not somewhere we would traditionally put out.
So you wouldn't be there at the moment, because you look at the share price, it's had a pretty awful year, and it's getting down. It's an interesting chart, isn't it? It's getting below those lows of the last 3 years as well.
Yeah,
so
well, I guess it's
chart wise doesn't look great.
Yeah, for us, I would say that if the bull case is that it's trading at a multiple that's lower than its historical average, it's probably not the right way to be thinking about investment. Mean reversion as a strategy is probably not a great one. But yes, it's had a bit of a tough time, but for the right reasons.
Yeah.
So it's just about, for me, where do we go from here? And the benefits here are the cost out story and maybe volumes recovering, and that's something that's really going to depend on the macro and their execution ability.
Yeah. Okay. Henry, what's your view on Amcor?
Well, I've got to say, it's not the most exciting of stocks, is it? Let's face it. It is widely considered, I suspect, as a defensive play in the packaging space. And the packaging sector itself has been under some pressure. And of course, we have seen, even recently in days with Endeavour, talking about how consumers are moving to lower cost brands to some extent, which I guess does translate to lower cost packaging as well, because they don't have the fancy packaging perhaps on the lower cost things. I think it's still going to be a bit of a struggle for them. The whole global packaging sector is trading on its lowest sort of PE for some time. Amcor, there's no real excitement here, is there? They reaffirmed guidance. They have got some pricing power to some extent. As Jared says, they have got a bit of a cost out story going on. Acquisitions would be good, but they are always fraught with danger. Of course, this made the big US acquisition basically change the face of the company effectively. It was a massive acquisition some time ago. So it'll be interesting to see what they can buy. There's another packaging company we're talking about later, which is interesting as well. But yes, I mean, it's defensive, not a bad yield, but it's not franked. It's hard to see where there's a huge amount of growth coming from this one, given the global economy continues to be under pressure and consumers are pulling back spending. So I guess for me, at best, it's a hold.
Okay. But Henry, as you say, this has always been seen as a defensive stock. But you look at that 1 year chart, doesn't look flaming defensive to me. You look at defensive stocks when the market's turning down, you expect them to hold up, but none of them have. Amcor, Ansell, a whole bunch of those.
Yeah, I guess the other problem is some of the perceived wisdom of the past in terms of crackerjack Australian stories like CSL, which has been under immense pressure. The likes of some of the defence. You look at some of the other defensive stocks. Endeavour is another one. Even Woolies and Coles. The defensive nature of these stocks isn't as defensive as they used to be. No. That is for sure. Even you look at the REIT sector, and that's been down and dirty as well. So it's not easy at the moment in the market, and it's those defensive stocks, maybe over a long period of time. But as you rightly say, Amcor has been on a downward trajectory for some time,
I
as
know.
has Ansell. Even the likes of Sonic. We've seen ResMed, which you think would be, relatively defensive until Ozempic came along. But the more things change, the more things stay the same, I guess.
I know you're a growth investor, Jen, but what is a defensive stock at the moment? None of them.
Well, GKG, I think, is one we want to talk about today, and we feel like that's a really good. Geez, you're getting paid 10% to hold it, right?